So it keeps it difficult to see now, and then another. Oh yeah. See the funny thing basically, so they're on the same side, and I'm standing in the space, nothing. Then it goes like now, it's one like
just make me report.
No. Oh, yeah.
Stuff there where I read the natural language process. It shows the BMW.
Yeah. That's right, you submitted an idea. So if you went to, I think there's a but basically, the next view was a great idea. It just wants to share what is I'll just going to get to the
One, one, two, one, two.
So let me be really clear. Out of the 31, anybody, this is it's about finding the money. Even if I can't go, it's still the so from the 31, 26 of the guys, hopefully, taking out of the still do it, despite us not necessarily pushing it, they will still try to come up and try and get in next. We've been really clear about doing the Indonesian part, but the BT part next to own devices and facilitating the solid part. To say
Who's that? Oh. Just.
Okay, just give us 5 minutes warning, yeah?
Okay. Yeah, I think we'll start in 15 minutes. There's no. Oh.
Mike's line.
Okay. One last presentation. It's the same, it's okay. Does it normally flash if it senses something? Yeah, it's the other one. This is the first time you're running a Google Glass presentation at this stage. No. Oh no. Oh yes. Sure you have. Yes. No, it doesn't seem to. Hours? Oh, plug into my laptop, I'm plugged in. Okay, let me get him mic'd up. Can I just change the name as well while you're on that? Is that a bakery you're now selling? Yeah, yeah. Yeah. And this is only going to flash for 2 seconds.
Yeah, maybe if you do it on this side there or something.
Yeah. Or it'll disappear after the event finishes. Yeah, I'm really interested to see.
Yeah, we've dropped some cool stuff. Unfortunately, a lot of it I can't present because of the press and stuff like that.
Yeah, you don't let the cat out of the bag before
think I downloaded yours actually too.
Really, and it's more kind.
Actually, let's see. Yours was
Are there a few friends today?
2.
Oh. Have you ever touched this one?
No. No.
Here you go. Yours is in
I
here.
wish.
See what we have here. Would that do it or?
Yeah, yeah, whatever works. And that has internet connection, of course.
Yep. If you do that, just want to make sure you don't.
Takes like a couple of seconds.
That's fine. So you're in a folder here, so we'll be set up
Perfect.
here. And then once this loads, you can just hit full screen. And it looks like it works.
What's your email address?
Can you just like minimize it and I can just set up from there instead of waiting for it to load? Or would you want me
Yeah,
to
if it's-
load it? Yeah.
If it's loaded,
If it just sits there somewhere.
that's fine. It'll be here. I'll even make it smaller so that it's not. It'll be here waiting for you.
Alright. What's your email address?
LUIS at fintechweek.com.
If you get that, there's an attachment there. It's just a JPEG. While we try to get this to work. I wonder if there's a mobile phone store, a Samsung store somewhere nearby.
There's like a shopping center or like a mall
Downstairs.
downstairs. It's Maze. I forget.
Hi.
Hello?
I didn't know you. Oh, you're a speaker. Okay, I was
Slash sponsor.
slash sponsor.
I'm just updating sheet. Anything? Drop it on the
But you need to switch the projector on because now I'm on something else. You need to switch chicken, switch. First of all, this doesn't set the thing, which is not a good thing. Yes, this, I guess, or switch the channel.
Yeah, 'cause it's on the same.
Yes, and let's see if we can. Chickens, can you mirror? Where's your this thing? Google Chrome. Why didn't you tell me to bring Google Chrome?
Google Chrome doesn't work.
No, but this works with this.
No, you have to open a specific app using this.
Yeah, but it's gonna mirror the screen.
Not that.
I'll pick up one from downstairs. I'll be back in a second.
Yeah, see if you can get one to VGA. They tend to work better than the HDMI.
No, because this doesn't even recognize this phone.
Right, okay.
If this says something,
Do you have a Wi-Fi here?
Yeah, level 39 visitor.
I need to see it exactly because I need to spell it. Is it capital L? Lowercase L?
It's all lowercase.
one second,
I
I'll show you. I'll show you.
Rolla 39.
Oh, capital L. There you go.
Space visitor, yeah?
There you go.
Right, just take that out, and then I'll get their laptop ready and set up. Do you want to take your adapter back?
Space 39.
Yes. I'm just going to go around.
Are you guys, did it work?
We'll get another thing.
I honestly don't know.
Visitors with no password.
Hey guys, these aren't on. Can I get some? Oh. Hello, hey guys. If you could start making your way towards the front, please. We're gonna get started in about 43 seconds. So actually 42 now. Can you hear me? Yeah. 39 seconds. So welcome to the inaugural FinTech week. We've made it through day 4 so far, so that's an achievement for something that didn't exist a few months ago. So well done, and couldn't have done it without you guys, because if you guys weren't here, I would just be here with a lot of echo in the room, which is not too bad. Enjoy the view. The hashtag is at Aviva Innovation and FinTech Week. Special thanks to Aviva for sponsoring the day. We have a tight agenda, so I'm going to try to keep things moving. So the structure is we have talks, no more than 20 minutes, panels, Q&As, and then startup demos. So it's all time to give you the most sort of exposure to the banking, insurance, and financial services. And there's networking built in the beginning and at the end so that you can get to know everybody. So it's actually been great to get the community together. I think if there wasn't a need for it, we couldn't have put this whole thing together in about 58 days. So it's good that London, the FinTech scene is starting to come together, because I think together with everybody in the room, there's probably access to millions of pounds, access to developers, but individually it's a lot difficult to get the things done. So part of it, what I wanted to do was to get the community together, get everybody to meet and greet, have coffees later, and eventually, make deals. And don't forget about the little guy that, helped introduce you guys. But I don't want to take up too much time. Eric Vander Klee, how do you?
Clay.
Vander Clay. Sorry,
It's one of the nicer things I've been called.
Yeah, Vander Clay. From Level 39, this is his sort of domain. He's just been building up this program, and if you know anything about FinTech, Level 39 is synonymous with it. So he'll tell you a little bit about what they're up to, and then we'll start our agenda shortly.
Wow, thank you, Luis. Actually, please put your hands together for Luis Carranza. The single-handed force of nature who has put together this amazing FinTech Week together with his team. And also a very special thanks to Aviva. Can I just say that they are being audacious. They really care about this kind of thing. We know that because we interviewed them, we grilled them. Do they really care about it, or are they just a sponsor? The programs and activities that they are helping to promote and introduce really do make a difference. So very keen that more do what people like Aviva are doing. So well done to them. So welcome to Level 39 if you haven't been before. It's a little bit different from other places in Canary Wharf, but yet it sits here right in the heart of one of the main financial districts in Europe. Everything about the place, from the design, the kind of shabby chic look that you see here, where we removed the ceiling so you can have a look at how stuff works under the hood, sends a signal that you can explore, can experiment. This is a place that we want experimentation, stuff to be tried that hasn't been tried before in financial services. It's very interesting. When financial services was conceived in the way it kind of operates today, the world was not a connected place. And so things had to be built in the way they were built in order to operate. Trusted networks, proprietary, all that kind of stuff. But the world is a very different place. It's a massively connected world that has so many opportunities for transformation of financial services, and in some cases to completely reset it. And the wonderful thing about Level 39 is that we see everyone here from the banks that want to come here to breathe in some innovation and to connect with some of the innovators, and we actually convene that for them. As well as we meet the entrepreneurs and innovators that are absolutely determined to disrupt them completely. And this place is the place that is really intended as a platform for the industry. So lots of other people come and run their programs here. We run accelerator programs, and we're delighted to host days like this here. We have an incubator. We're just launching this year an investors lounge, a private members club for the investors to come and hang out and to do deals together. So we're trying to put in place the building blocks that the fintech industry really should have in order to help it succeed. It's really strange to me, isn't it? There are only 3 places in London that really care about fintech, but yet it's one of the biggest sectors by GDP. We should be having 50 places like this that really care about and support fintech. So I'm very proud to be part of that, having built a fintech company here in London myself, which was one of those 10, 15-year overnight successes. It took a really long time and almost bankrupted me twice in the process. But that experience is what our team brings to bear to support innovative businesses, as well as some of the incumbents as they seek to transform themselves, because financial services matters to everyone. It touches absolutely every part of everything we do, and has the potential to do some really unique things, such as financial inclusion, that I think that the innovators here will help to promote. So just to say that if you want to ask us something or you have an idea, we particularly like the bonkers ideas. Come to us with bonkers ideas, because we'll thoroughly explore with you how to make these work. When Luis came with us with this idea, it wasn't bonkers, which is why it's happened. Although him trying to do most of this by himself was bonkers, but it was a terrific piece of work and we're delighted to support it. So thank you very much and have a terrific day.
Great. So there's been, lots of help, but everything from the spacing of the letters to the design I've had to do. But I couldn't have done it without lots of these people who are here, who it would probably take me all day to name all the names. But big thank you to the FinTech startup community and the companies that are here today, and especially to Aviva. I'll give you a quick overview of the agenda. We're running a little bit late, but I'll get everything whipped into shape shortly. We're going to have a panel on how the industry is changing, then Insurance 2020. We'll move on to some technological disruption, and then getting the most out of your data, followed by how you apply big data and the frameworks for doing so. A couple startup demos, one even with Google Glass, which should be interesting. And then we'll have lunch and networking out in the reception area, followed by a bit of risk and data management, of the evolution of equity crowdfunding, alternative finance, pensions 2.0 from Con Keating, who is a brilliant man, head of research at Brighton Rock. User-centered design in finance, which should be interesting. A personal friend of mine, he was actually the best man at my wedding, worked on the Ping It app and is now doing something really interesting. And then a couple more startup demos from Xilex and Nuka Brain, and then we'll finish with some closing remarks from Nick Ammon of Aviva. So it's a packed lineup. I think I probably took away 2 minutes from somebody who was going to say something more interesting. So I'm going to get out of the way and...
Luis, sorry, it's Eric again. I made a mistake. I'm going to borrow one more of your minutes, if I may.
Oh, yes, please.
Sorry, something I forgot to mention. I was just nudged to me, and that's why I'm really cross with myself for doing this. Is one of the things I wanted to mention today was an important announcement that we're making today to really help support the FinTech community here, which is a friendship agreement with our first similar space in New York, called the Fueled Collective. Now, this is very important as a step, and the reason I mention it is because one of the challenges that I faced as a small fintech operator in expanding internationally was how do we connect internationally with like-minded people there to help us smooth the transition as we become international. That's why it was important that you kindly allowed me the intervention to make the announcement about our collaboration with Fueled Collective, because I think by being better connected internationally, the sector will be even more successful. So thank you so much for allowing me that small intervention.
And on a sort of similar note, so this year was to make sure that this thing happens, and I think we've proved that there's an appetite for it. So next year, the bonkers idea is to do it in 3 to 5 cities at the same time. So we'll be looking for a bit of sponsorship to make that happen. Not impossible. A lot has happened, but do enjoy the view. I took this picture here about 8 months ago when I ran an event here, and it's actually pretty good for marketing. So do enjoy the view. It's a great place to be. But without further ado, let me get out of the way and bring the panelists forward.
I'll take the red seat.
I'm on green. Good.
Oh, that's good. You're going to have an easy ride. Guys, just to get us started and give the panel an idea of who is in the room, can we do a quick hands up? Anybody from corporate, so working for a bank, financial services or insurance? Okay, it looks about half. Anybody in a fintech startup? Anybody else? So journalists, analysts? Okay, so pretty much half and half. Right, excellent. If there's any burning questions, I've got quite a few, but if there's any burning questions from the audience, please also indicate and we'll give it a go. We're very privileged to have 2 very knowledgeable individuals with us today. So Tom Somodolo from Dresdner Commerce Bank previously and now with PayProp. which is, should I say, a startup still? You see,
It's a, let's call it a growth business.
A high growth
with a
business.
very strong startup mentality.
excellent. And then Rob Horton is also from Aviva. He leads our solutions delivery CIO area for any digital proposition that we basically do. Tom, was there anything else you wanted to add just to set the scene from your side?
I mean, I saw on the agenda that you have there's mentor. I mean, that's what I do as well. But I think the reason why why I'm here as PayProp is because up until end of last month, so as of March, we have been under stealth mode and we launched the business. And so what is PayProp? It's ultimately a cloud-based platform that allows landlords, letting agents to manage both the rental part, the rental collections part, as well as the properties on behalf of themselves or their clients. And ultimately, you can also transact through it. So it's a financial services idea wrapped around a very concrete user proposition.
Okay.
And we launched the business in the UK, as mentioned, 2 weeks ago. And we are in execution mode.
Good. Rob, was there anything else that you wanted to position?
I should just explain what I do because I'm very corporate suited. But I run a team of engineers, software engineers, testers across the UK, Ireland, and I also look after our European and Asian businesses as well. So my main job is almost chief geek for the organisation. I know I don't look like that, but I am an ex-software engineer. I probably couldn't write it anymore, but I can still read it. You know, it's that kind of stuff.
Excellent. I mean, the key question and for the whole panel is, how is technology changing FinTech? Right, so maybe we start with you, Tom, being on both sides of it. How, in your opinion, what are the key things that are changing the FinTech space from a technology point of view?
I think the one piece that people typically look at the FinTech space from a technology, from a financial services point of view. I actually think what mainly changes the FinTech space is actually the consumer. Or the consumer expectation has changed dramatically. Smartphones are actually changing the game much faster, much quicker than financial services companies want to see or could envision. Not just them, but anybody really. Yeah, it's this famous picture of the Pope being elected now versus 5 years before that. Yeah, so ultimately that is the game changer, and financial services companies have to adapt to that. Otherwise, somebody else will eat their pie, and it probably will be a technology firm that will transform themselves into financial services firms if the financial services firms don't adapt. And I think they will, but ultimately, I think that's ultimately the key driver is not the firm, the companies, but actually the end user and consumer. And it's so the consumeration is actually driving also the FinTech into kind of investment, essentially.
Rob, do you share that view? Do you think big technology companies are a threat to financial services companies?
I think they may be a threat in certain sectors. I think if you look at, I can only speak from an Aviva perspective, or I should speak from an Aviva perspective. What we're there to do is to look after the customer. So what we're there to do is, and if you listen to the calls in Aviva, then if someone is dealing with a death claim or a terminal cancer claim, or they've just smashed the car up, or their house has been burgled, then our real challenge is to make sure that customer experience, and we look after the customer, all that kind of stuff. So for us, it's about putting the customer first. And I think if your father's just died, you know, you don't want to be dialing into Google and having a conversation with them, or dialing into Amazon and having a conversation with them. So for us, how is technology changing Aviva? Then all the things about giving that customer proposition. How do we bundle our products? How do we make the customer experience the best possible experience for the customer? How do we handle the claims in a great way? How do we service the customer? Big data, how do we understand the customer a lot better in terms of how they come into Aviva, which draws on a lot of questions about data aggregation, ethics, and that kind of stuff. But so for us, it's about that customer experience, that customer care.
That's a good point. Tom, so if I draw a spectrum, and on the one hand it's high tech, and on the other hand it's high touch, where do you think the future is going to be from a customer point of view in financial services specifically?
Can you just elaborate a bit more what you mean with basically high touch? Like, obviously this is high touch.
Yeah, so to Rob's point, there's a recognition that, yes, technology makes things much more convenient and much more efficient, but the question is, do customers really just want convenience, or is there still a place in financial services for high touch, for being able to call my bank, to be able to speak to my insurer, be able to have that human interaction? What's your view on that?
I actually think both is true. I mean, it's as bizarre as it sounds. There's certain elements in financial services. Let's use pension administration. Yeah? There are a lot of brokers. I spent a good deal of my time the last 3 weeks speaking to people on the phone, and all they did is I asked them to send me an email about my pension, and so I got an email 2 days later. You can automate.
It's not with Aviva, is it?
No, that's a competitor of yours. It's a broker, actually.
Okay.
So, and all you need is ultimately a website for that. So ultimately, the efficiency is baked into that. It could be. I mean, it's ultimately just. And if that particular broker doesn't adopt it, companies like Aviva or others. I mean, in this case, it's Fidelity or Standard Life will actually eat the pie. And that will happen. So the efficiency element is in there as well. On the financial services bit, when it comes to high touch, when you speak about larger amounts or events, it will not change. I mean, ultimately, all you can do is use technology to make the experience more efficient from your end, meaning from the financial services end. I'm going to use PayProp now, ultimately, as an example here. We deal with property or transactions / rental payments. It's typically the largest single payment individual has if they don't own a property. So it's several thousand a month. You would want to kind of walk the particular person through, at least in the customer sign-on phase, to make sure everything's done right. Because if not, first of all, it's a massive commitment from the user side to kind of use you, to trust you, and ultimately it has to feel comfortable to do that. So in that case, when it comes to a high touch proposition, you can eliminate several steps in-house, but you cannot outsource everything there. So all I'm trying to say here is there are certain areas where you can improve the efficiency from the inside and ultimately keep the high touch approach to the end user and customer. And in some cases, actually, you can completely eliminate the intermediary, and because in the case of pensions, for example, people are very comfortable using online. You don't need a broker anymore to give you a quote, etc. They can do it online. So it covers both, but you have to look at it on a vertical by vertical element or basis in the financial services.
That's a very interesting question, and we had a quick discussion before this panel. The two disruptors being the technology or technology players itself, but then also talking about financial services being fragmented. So to your example, taking a small step or a small piece of the value chain and breaking that up and having some disruption just in that space. Rob, do you have a view on that? Do you think the big changes in the industry is going to be an end-to-end player that is going to be dominant, or do you see it's going to be small companies chipping away at the value chain?
I think again you see a mix. Some small financial services company will focus on one aspect of the value chain. And take a lot of risk in that one aspect of the value chain. So you've just seen, a couple of major insurance firms get slaughtered because of the government change in regulation because they're so focused on one particular aspect of the marketplace. Other large, well-known insurance firms will focus on, as in Aviva, will focus on multi-product sets, multi-distribution models. So we already go direct, go through brokers, go through agents, go through supermarkets, go through car manufacturers, go through banks and so on. So that type of multiple distribution model, multiple product set, which makes us fairly unique actually in the UK, or unique in the UK, gives us a lot of competitive advantage. Does put a lot of strain when you talk about how is technology disrupting financial services. The challenge for any large insurance company is on the back end services and on the operating model within the organisation. So if I talk about engineering, we're driving a massive shift to agile delivery models to drive that change of pace in terms of how we get product out to the market, because otherwise you're too wedded to the old corporate way of doing things, as in the suit.
That's a good point. Legacy infrastructure always comes up again and again, and it's not just infrastructure, it's also culture. So Tom, you had a foot almost on both sides, right? Back in the big bank and now in a relatively faster pace, smaller technology I don't want to call it a startup, but high growth company. So do you really think that big corporates can get rid of legacy? Do you really see that being disrupted?
Big corporates ultimately, I don't actually think legacy is a bad thing. Ultimately, it's just how you manage the transition, because ultimately you still have, banks and insurance companies, I don't want to sound dismissive, but have still to some degree use mainframes till this day. Yeah? Yeah. So, but it's actually important that that these systems work. Yeah? So, if they can combine a mainframe with the latest Java, whatever, a front end, great. Ultimately, and I'm not saying that it's all legacy is bad. It's ultimately how you respond to kind of customer demand. At the same time, you do have to migrate, because at one point it just becomes too expensive. Yeah. Yeah. So legacy is what large companies have to deal with, and in my experience, that's it served a purpose. The thing here is I think right now in the last couple of years we're experiencing a step change coming from the consumer, but also from the IT side, agile technologies and what have you, actually making it much easier to let's put it this way, to use a really boring term now, to change the whole middleware, way middleware works. And ultimately, if you look at it from a pure IT perspective, that element will actually change dramatically over time. And the benefit of new startups or new business in that space is that they don't have to deal with that legacy, but for them, they have to understand it at the same time, because you cannot disrupt something you don't know how it works. Yeah. So ultimately, legacy it's a good hunting ground. You have to understand it in order to do something else with it, and the people who can do it are the insurance firms themselves or the financial services firms themselves, and if they don't do it, somebody else will. And it's very often it's actually the same people, just in a different disguise, meaning people like me who have worked in a bank and now left the bank in order to do something related to it in a more kind of dynamic environment, at the same time still kind of relying on the existence and functioning of a proper banking legacy system, as you put it. So it's not about disrupting, it's ultimately kind of just changing the pace. In-house banks or insurance companies would do in-house. Yeah. And that's really what we do.
Rob, so staying with that point, and then I'll ask a question open to the audience. Just on this legacy, one thing I always notice is whenever you speak to startups, 95% of the applications and the propositions are based with a customer-facing side, and you almost sense there's this massive opportunity in legacy where very few startups play. In your view, are corporates able to change themselves, or is there a space for startups to help solve the legacy situation?
There's definitely a space. The techniques we use is probably common to any tech. I don't know how geeky the audience is, so forgive me in terms of the language I use. But the techniques we use is pace-layered architecture, service-orientated architecture. So we wrap our legacy admin systems with service-orientated architecture and a high pace layer on the front end. It's a common technique. The challenge with doing that is a lot of the policy admin systems were never designed to operate in the world that we're now operating in. 24/7. Constantly on, etc., etc. We still have batch job systems in our network. So the challenge. So yes, there is a space for startups to help on that services architecture, on that front end architecture, running the back end policy admin systems. I'd love any startup to have a go at those, but I think you'd have to go quite back to old programming. It's like systems written in Latin rather than systems written in English. So not many startups will want to take those on, I don't think.
Excellent. Right, we've got time just about for one question from the audience at the back. Sorry, sir, would you mind standing up, just saying your name and organisation and good night.
I run a FinTech innovation company called New Buckland. A lot of the technology innovation at the moment has been fairly low-lying in products and processes, but technology can also spur innovation at business model and ultimately industry, changing the game on basis of competition. Let's say tomorrow or next month a new entrant emerges, which is that game changer, the Apple of financial technology, the Apple of insurance. How long will it take you to adapt to compete with them effectively?
That's a virtually impossible question to answer. Isn't it? It's a huge. It depends. We're very alive to the risk. We're very alive, and we watch the marketplace very closely. So we do a lot of understanding of our global marketplace. We also look at our adjacency sectors in terms of what other industries are doing, and leverage our partners a lot in doing that. So, you know, it's survival always drives a response. So it depends on what the competitor was doing, but in terms of survival, that drives response. Have we got enough agility and focus within the organisation to adapt to it? Then yes, I believe we do. Have we got some constraints in terms of our platforms? Of course we have, you know, but that journey we're on architecturally about wrapping the architecture and pace layering the architecture gives us a lot of agility actually in terms of how we respond to it. And we want to be leading the marketplace rather than lagging the marketplace in some of the stuff that we do.
Right, it's time for us to wrap up. That's been excellent, guys. One last question. You've got £1 million on Betfair, and you have to place a bet on the one technology that will disrupt financial services in the next 10 years. What would you bet on?
Next 5 years or 10 years?
Okay, 5 years.
Did you say 5 or 10?
I say 10, but let's
Sounds
go.
good. That's good.
Okay, stay with the original. 1 million, one technology, 10 years. Which one?
For me, it's I'll just wrap it as automation. So in terms of where the industry is going on driverless cars, automation, wearable tech, all that kind of stuff, starts to take the need for insurance out of the consumer's hands. So when you start to de-risk propositions, the need for insurance becomes less in certain areas. So if there's any disruptor, I'm less concerned about the Googles and the Amazons because they can't provide the same customer touch and customer empathy that any insurer can do. But when I look at where technology is de-risking the need, then that's where I think the risk is.
Excellent. Tom?
I would actually say I'm going to split it in two and make one for B2C and one for B2B. On the B2C side, I think anybody who can package up communication with payment technologies, that would probably be the game changer. On the B2B side is ultimately, right now most financial services propositions are very much transaction driven. If you wrap it up, a transaction driven business model in a proper value could be delivering XYZ and then build a transaction engine on the back of that, I think that would be a good bet for me on the B2B side. So communication and payment technologies on B2C and a value proposition with an automated transaction engine would be on the B2B side.
Excellent. Thank you both for your time.
Thank you.
Thanks everyone. Big round for our panelists, please.
Now we'll have Keith Mission from Aviva telling us about insurance in 2020, which is coming up.
Morning all. As I was leaving the house this morning, I was having a quick catch up with my children as they had breakfast. I said, "What are you doing today, Dad?" I said, "I'm going to do a presentation." And my 5-year-old said, "I've got to do a presentation today." I said, "What are you doing?" He said, I'm doing on the Inuits." I said, "Brilliant. Well, I'm doing it on insurance," he said. He had that sort of childlike moment. He looked at me with deadly serious. He said, "Dad, you have to remember one thing. You have to look around the audience like this. And if you do that, you will get 3 stickers." Let's hope this is a 3-sticker presentation. I'm sure. Where's my clicker? Right. This is a bit of a tough gig, right? Predicting the future. Wow. If I could stand on the stage genuinely and say I know what's going to happen, actually I wouldn't be standing on the stage. I'd be running a small startup somewhere or making a lot of money or whatever. It would be probably sitting in a jacuzzi somewhere. But the reality is lots of us make predictions of the future on a very regular basis, and quite substantially they are incorrect, as this particularly classic example shows. So I'm going to cheat. I'm not going to predict the future. Of course, I'm not going to be able to tell you what the future of insurance looks like genuinely in 2020. But I am going to talk a little bit about some of the trends that we see emerging and where it's taking us. But also, before we do that, I'm going to sort of take a step back and look at what insurance really means. Unfortunately, the person who was supposed to be doing this presentation has had to cancel at the last minute, so I picked up the presentation. And what that does is a very interesting thing. I then had to look into what he was going to plan to say, and it sort of forced me to think about exactly what we do. So, of course, what's the first thing you do when you have to research anything? Wikipedia, thank you. So you go and look at Wikipedia and you start to think about what does insurance actually mean. And what it made me realise was that insurance is a fundamental driver of society. In fact, forget insurance as a thing, but think more about the requirement of us as humans to protect ourselves. We move from a sort of a feral pack to a society precisely because we get together and help each other out when things go really badly wrong. And that's sort of developed over time, and it was the Chinese and the Babylonians who really got into sort of the concepts of covering in a financial way. The Greeks and the Romans did it, and it wasn't until the Genoans in the 14th century who actually created the first insurance policy that the actual sort of insurance itself came to life in a very practical and tangible way. But that has been a driver through society since we huddled around campfires banging rocks together. So it sort of put insurance as a whole in context for me. And actually, if there's one thing you take away from this very short presentation, is that actually insurance as an industry is a driver of societal change. And we'll see why, hopefully, in a minute. Strong currents reshaping the industry. I think one of the strongest currents in the insurance world is coffee. Any idea why? So if we go back to 1696, in Tom's Cafe here in London, the Hand in Hand insurance company was started. One of Aviva's very original, I think probably our first company, of which we own many brands. But way back in 1696, and partly because traders wanted to protect their goods going abroad. And it was sort of the growth of the coffee shop per se, and the desire of people to get together and drink coffee, and also the desire to protect coffee, as it was a very valuable commodity and the way it went across the world, which was a key change in the way the insurance industry worked. So if there is one current that's driving insurance, it's coffee. But take a slightly separate example and move into a different industry and look at actually what coffee does today. Starbucks is a really good example of this. We all know Starbucks. Starbucks does some quite amazing things in some ways, and we all have our opinion about the quality of their coffee, I'm sure. But if you look at what they've done in the US, for example, you can download the Starbucks app. The app contains a wallet. You buy your coffee with the wallet. They've trapped you in a currency loop, so you don't have to escape. You order your coffee early in the morning, so you know exactly where it's going to be, and it's predicting your day is driven around this daily cup of joe. It means that you can step into their ecosystem. It never ceases to amaze me that Starbucks will sell you music as well. I find that link really strange, but actually it's a good one. And so there's a broad ecosystem available to the customer, of course, at the back end with all the connections and the supply chain and the farmers and the distribution and the logistics. And it's a huge organizational entity with a really powerful brand and a really strong consumer touch point. So there are some things in there which we'll talk about in a moment, which are also sort of relevant to the way that we develop our propositions for our customers as we go forward. I love these. So I'm sure part of the problem with doing these sort of presentations is that you're probably all more aware of these things than I am, right? You're a much smarter group of people than I. So accelerated pace change, we all understand this, and in fact we all feel it on a day-to-day basis. We haven't got TV and radio on there. Right, so TV took however long, longer than Google, so 50 years, I think it was radio, 100 years to get 1 million people. But actually, it's not necessarily the pace of change per se. It's actually what is it in society, for me anyway, what's in society that's driving these changes? How does this happen? Why is it that Google can get there in 6 years, or the iPad in a year and a half, and why it took TVs for so long? And it came down to a few things for me. One we've already mentioned actually is connectedness. So being connected, being able to see what's going on, understand what's going on, being able to commune with people outside of your small sphere of influence and actually understand what is available starts to drive adoption. The cost point for building things has come down as we've developed technology to produce manufacture. And of course, to a certain extent, and we probably don't feel this, but we have more free time. So we have more time to adopt these things. And I guess the question is this a trend that we'll just see continually growing? Are we picking here certain things that we want to talk about in terms of accelerated change? Or is this just a more general thing that's going on in society that we're going to ride whatever happens? I think one of the key points on this one, and I often say this, and I've yet to go and do it, but I'm sure actually you guys are the ones who will go and do it, is you could go and set up an insurance company with a credit card pretty much today. right? So you could go and get Salesforce to run your business processes and Zendesk to run your customer help desk, and you could get, I don't know, whichever policy admin in a box solution, and off you go. And actually that's sort of amazing and scary at the same time. And if you're an insurer, you look at the cost of entry is so low and the ability to get going is so low. As a startup, I guess you look at it and go, wow, what an opportunity. Something that we think about quite regularly. Shifts in customer behavior. I think one of the, I think we all sort of understand this at an underlying level. I think this sort of seamless experience thing is one that we come to expect out of certain industries, and it's definitely an area where there's plenty of growth still to happen. When you look at the number of channels available to our customers, I remember sitting in our IT lab in university on some sort of chat program with a guy in Hawaii, and just being struck by how amazing that actually is. If only I thought ahead and bought some shares in the companies that were going to make it big, right? I wouldn't be standing on the stage again. But at that level of expectation, I could do it. I could do it in 1996. Then we had websites, and I could find anything I wanted. And I have a Google, and I could find anything I wanted. And now I can transact anything, anywhere, at any time. Even putting together presentations, nice and simple. You just download them off the internet. So my level of expectation has just risen. It's really hard to say what my level of expectation is going to be in 2020. I sort of feel like we're going to peter out at some point in the near future. How much more connected can it get? So I guess there's a question for me, which is what happens below the surface? We talked a little bit about automation, but actually my level of expectation won't be on the front end layer when I'm talking and interacting with companies. That seems to be plateauing. It'll be more about the expectation of delivery and service and how that all comes together from a propositional perspective. And that's something that we're going to have to work hard to manage. One of my favorite examples, though, and I've used this a number of times, around these sort of levels of expectation, you really can go and buy anything on the internet. One of the things that I do on a semi-regular basis, you need to eat food. So at the end of the day, you're tired, you can't bother to cook, and you go online, you find your favorite Domino's pizza, and they'll deliver to you, and you can track it through the process going into the oven. But also even now with the availability of technology, small companies, my local Chinese restaurant will allow you to order online and track things through the process. And it's sort of that commonality of expectation from the big players down to the very little, which I find quite astonishing. No talk at all about trend would be complete without big data. I can't remember exactly the date, but we produce more data a day than was in existence up to the year 2000 and something, 2001, 2002. And we're going to continue to grow the data that's available. And in fact, we're going to bring on more devices, more connections, more things that will generate data. Who here has a Fitband? Who here has things in their shoes? Who here has a connected car? It's all generating data. And one of the questions that it brought out for me really was in terms of looking into the future. For a time, there was a sort of we're looking for the needle in the haystack, right? That's what we're all here to do. Find that one thing that gives us an edge in terms of competitiveness, or in terms of our ability to work with our customers more effectively, or whatever. There's a different question though, which is it actually a needle stack and there's lots of hay in it? Is there so much data that actually we're going to pull it out of anywhere, that we'll find loads of different trends, loads of information, things that we can't even comprehend right now because we're sort of limited? And you don't have to look at what IBM's done with Watson. Everyone knows Watson. Maybe we will not be able to make the step that says we can consume all of this information. It will be the machines that do it for us in a sort of dangerously Skynet sort of way. But it's, again, there's a trend here where will we plateau in our own ability to consume and manage this vast ocean of data, and then we'll become reliant on technologies to do it for us. I love this one. I love the Internet of Things. I think it's the fact that you can get a toothbrush which has sensors in it which will tell you whether you're brushing your teeth effectively, or your tennis racket which will tell you whether you're serving effectively. And the fact that I sort of, on one level, there's a bit of me which goes, that's quite astonishing from just a technical, a geeky perspective. I think I'm probably a slightly bigger geek than Rob. We can have a geek off later on. But I find it just astonishing that A, it's possible, but B, I'm also really comfortable with it. You're comfortable with electric toothbrushes, and the fact that someone stuck something in there which will link to a mobile phone and tell you, are you brushing at the right angle, is sort of, well, that's fine. Back to that level of expectation. It's something that I'm completely comfortable with. And going back to my 5-year-old and now my 2-year-old, They pick up an iPad and they get going with it. I'm sure you, or you have children have a similar experience. And in fact, they get disillusioned by the fact that the TV does not respond to their touch. Their level of expectation has changed dramatically as well, and will continue to do so. We'll take the Spider-Man electric toothbrush and replace it with the Cars toothbrush, which has the sensor in, and I'll be able to tell him to within some degree of accuracy just how well he's brushing his teeth. And that is a scary thought. And that sort of then broadens out. So when we're all connected and everything is connected, and we're all watching all the data, etc., what does it do to us as people? It's a behavior modifier. That's the thing I took away from this. It's not about the ability to connect and consume data. It's about what it does to us as people. And if I am brushing incorrectly and I do alter my behavior, then perhaps I won't get any mouth diseases and maybe I'll live a little longer. Maybe if I'm driving and I get responses that say you're accelerating a little too hard for this area, I'll back off a little bit. Maybe my driving behavior will change. And when you think about what that means for insurance, there's some fairly obvious implications, but it will be driven by this particular trend. Going back to the point of earlier, the connectedness, the link in, for example, through Starbucks into their broader ecosystem, and of course all the ecosystems that are being built. And there are some really classic examples. I see there's a MacBook there, Apple, there's another MacBook there, I'm sure. Lots of MacBooks. So I think the Exhibit A. I remember going into a coffee shop in San Francisco, and there were about 20 people in there, and every single one had a MacBook. It was so cool. It was just ridiculously cool. I felt, glasses, MacBooks, except for one person who had a Dell. And I did feel sorry for that person, like deeply, deeply ashamed for that poor person. Great coffee, MacBooks everywhere, fabulous. I've now lost my train of thought entirely. So back to the ecosystem. So how do we link all these things together? And one of the things from an insurance perspective, when you take it forward, to Rob's point earlier about how important insurance is to our end customer, of course. But insurance is important at so many stages in a customer's life, right? So when you look at it from birth, well, of course, you want child care, and you want to make sure that they have a good start in life, and then you want to drive a car, you want to learn to drive a car, you want to buy a car, you want to buy a house, etc., etc. So all these massive life events. And at each one of those life events, there are a whole range of different services that you need to pull on. Legal assistance, moving house, finding a house, I don't know. The lists are endless. There's going to be a win for someone to pull all those services together in a seamless way and provide it as a wrap solution to the customer. There is then a second question, which is back to the Apple versus the Google debate, for example, which is is it closed or is it open? Will we as insurers get absorbed into somebody else's ecosystem, or will we create and manage our own? And that's going to be quite an interesting challenge over the next few years. So, in closing, to go back to the very beginning, where would we be as a society without insurance? Okay, you could argue that there's a trend, we have a trend, of course, to protect each other, which is why we have society. But if we didn't have insurance, would traders have put goods on ships and sent them off into the new world? First couple of times they didn't come back, then you're not going to do that again, are you? First time your house burns down, you can't afford to build another one. Unless we all pool together, then actually society doesn't advance. Would we have ever got beyond the banging the rocks together stage? I mean, it's a serious question, actually, for me. And the answer is probably not. Insurance is a driver of societal change and is a driver of people's behaviour. So, I'll end. I think I'm probably slightly overrunning, so apologies. But just in closing, nothing is going to happen in isolation. I think the point about all of those trends, everything we just talked about, or I've just talked about, you had to listen, but everything we just talked about, it's all connected. The Internet of Things drives big data drives ecosystem, it drives expectations of the customers, it all comes together. And to the point we were talking about earlier on about the interaction of large-scale corporations and small startups and everything in between, nothing is going to change in isolation. We're all going to drive it together. And I think that's a really important point. One of the final thoughts which came to mind as I was discussing this with my son was that actually we look at insurance in the main as the last resort. I sort of think about the Groundhog Day example, right? So Groundhog Day, the film, he has a challenge, a particular challenge, but he also has an option of last resort. He gets reincarnated every day, right? If he didn't take risk to try and solve his problem, he'd still be there doing the same thing day out, day in, day out. He has to take the risk. But he's covered at the very last thing, the last resort. And I think quite a lot of people have that perception of insurance. It's the thing that is the last resort. We will be protected if things go wrong. But I look at it in a slightly different way, which is insurance allows us to take a little risk. We can take risk because we know we have a little safety net. So I'll leave that, given that there's a lot of startups in the room and business is risky. I'll leave you with that thought. So enjoy the rest of the day. It's been a pleasure to talk to you. And I look forward to working with you in the future. Thank you very much.
I thought you would mention that guy, Bill Murray, like insurance from ground floor.
I only have a short amount of time. We'll play the video later.
Here. Here you go. I think you're here.
Good morning, everyone. My name is Vida, and I'm a consultant. Oh, hi. Oh, sorry. Oh, then chairs, and this thing should not be here as well. So good spot, but I've closed it just. Oh. Sorry, we'll take a second. This is the first time I'm using Prezi today, but I heard someone else is using Prezi today, so hopefully I'm not the only one. We'll take a second to load. So good morning, everyone. My name is Vida, and I'm a consultant specializing in commercial finance. I have a keen interest in technology startups, so I'm very excited to be presenting here at Level 39 this morning. I've spent majority of my career analyzing financial data and presenting it to non-financial audiences, which I have found to be a very exciting challenge, as a lot of people feel very uneasy dealing with numbers. Actually, most of the people completely switch off whenever they hear the word finance. And data visualization is one of the key trends that I'll talk about more later this morning that is attempting to solve that problem. So I have prepared my top 3 trends for you this morning. However, just before we take a look at them, I think it's important to remind ourselves of what financial services looked like just 7 years ago. And I actually have a little video for you. So hopefully the sound is on fine. Take it, it's allow here, yeah, and allow again.
And so what is the feeling? Is the feeling that bankruptcy is inevitable now? Is that the concern?
I think so, and there'll be more. There'll be more.
Well, have you been told anything specific on the inside?
There'll be more. There'll be more.
Explain the mood for me. I mean, the
mood? People are drinking beer, smoking inside.
Do you think there'll be a bankruptcy tonight as well?
So financial crisis has really led for banks and financial service institutions to focus on increasing efficiency in terms of the way they are increasing efficiency as well as transparency and visibility in terms of they're managing their capital and risk. And in attempting to do so, they have found it increasingly difficult to innovate internally. Financial crisis has also meant that financial institutions have focused on their core businesses, therefore allowing technology startups to go for completely new business propositions. So let's take a look at the first trend, which is big data. And just as a quick reminder, big data was only defined back in 2001 by a company called Gartner, and they defined it as being three-dimensional, which is volume, velocity, and variety. Now, just 10 years later, over 71% of financial service institutions are saying that they are already looking at big data and analytics, and that's based on a survey done by University of Oxford and IBM. The key reason why I've included big data this morning is that there are two drivers behind big data. First of all, its ability to monetize on it, and a lot of companies are still struggling to find ways how to do it. Secondly, no other industry than financial services is better placed to monetize on big data. Better placed to monetize on big data. Consumer analytics is really the key driver of big data. And over 53% of financial services companies are having consumer analytics as at the top of their project list. Therefore, consumers, not products, are at the top of industry leaders' agenda. And that's, again, based on the same survey by University of Oxford and IBM. A great example comes from Singapore, Malaysia market, and overseas Chinese banking corporation there looked at their historical consumer data and prepared an event-centered marketing strategy through multiple channels such as email, text, ATMs, and other. They received a return on investment in 18 months, increased their cross-sales opportunities by 60%, as well as increased their conversion rates by 45%. Big data also means big integration, and as we talked about already this morning, it's about integrating legacy systems or putting new systems in place. And just over 50% of financial services institutions have said that they have integrated services. Therefore, integration seems a clear way ahead to jump off their competition. And you can see that it's the first time I'm using Prezi, but hopefully it will get better. Data visualization is my second trend, and data visualization comes as part of big data. Visualization allows people without analytical skills to really get the best insights out of complex data sets the way they can really understand it. And tools like Tableau and SAS Visual Analytics have been around for a while, but it's really the complexity behind the driver of big data in terms of all three dimensions, velocity, volume, and variety, that remains a challenge for a lot of companies. A great way, gaming is a great way to do it, and one company in particular is already doing it. Seven Investment Management is teaming up with companies of gaming creators of titles like Donkey Kong and GoldenEye to make their investment management portfolios more interactive and fun. It's also taking a step ahead and thinking behind current visualization tools. And a Spanish bank like Haiha launched their experimental stock music app just over a year ago, which looks at your favorite music song and changes the high and low tones of your song depending on how well or bad your shares are performing. As part of data visualization comes better financial services interfaces that we talked about this morning already. And it's really a new developer-centric trend which focuses on improving current systems for developer teams to build upon quicker. And so examples there include Stripe, Bandbox, as well as balance payments. My final trend for today, I sort of put it in one title here, which is alternative financial services. And so we've all seen that crowdfunding and peer-to-peer lending were at the top of the news past year and will continue to be so this year. with companies like Kickstarter, Crowdcube, which is one of the newer companies here in London, Lending Club, and Funding Circle. Lending Club has just reached their $4 billion mark. Over 7 years it's been founded. I can see some nods here already. Kickstarter just reached their $1 billion mark, and that's over 5 years since they've been founded. Crowdfunding and peer-to-peer lending not only allows better access to capital markets, but it also gives investors better investment opportunities, as well as allowing independent products to get into the market much easier without the usual traditional barriers. Some very exciting recent examples there include scientific research as well as real estate, meaning that more of top people can go after really top opportunities. Mobile wallet is the second space to watch, and again, someone was talking about it earlier this morning already, as people get more and more comfortable using their mobile phones for making those transactions instead of using stack of plastic cards. And some of companies there are Lemon, Square, as well as big players, Apple and Google, which we know of already. Finally, virtual currencies, such as virtual or cryptocurrencies, such as Bitcoin, Ven, and Ripple, have been at the top of the news and will continue to do so. Doesn't matter where you stand with Bitcoin. The reality is that a lot of companies, online and offline, are already accepting Bitcoin. And actually, Bloomberg did this very exciting experiment where one of the Bloomberg reporters spent 12 days living on Bitcoin, and he was able to buy anything he wanted. That was in the US, by the way, so perhaps not so much here in Europe. As well as new credit options. So companies like Affirm looking at extending credit in ways that haven't been done before, and they're looking at data like who you are and what you are buying. And just to close, there are a lot of, so I've touched upon just a couple of trends this morning, but a overriding effect of mobile, as well as real-time analytics, regulation, transparency, cloud, and there are so many other things that are affecting financial services today that makes it a very exciting space to be. So thank you very much. I think I'm on time. Am I, Lewis? Yeah, perfect. Thanks.
We can do one or two questions if you'd like.
Anyone? Thank you.
Yeah, you mentioned disruption to banking, I suppose, through the platforms. Have you noticed any disruption to the full stack in insurance? So firms which are not selling innovative products to the legacy insurance firms, but are actually coming up with new forms of insurance. There's insurance, I think, in Germany, but is there anything similar?
I'm less familiar with the insurance market. Perhaps it would be a question to one of the Aviva guys here. But as I said, Affirm in terms of credit, and I think examples that you can see in other spaces will replicate or take slightly similar forms in insurance market as well. If that answered your question. Anyone else? Thank you.
I don't think I saw security mentioned on there. Don't you think that's a major issue in financial services at the moment?
Yeah, sure. Not just financial services, of course. If you mean data security, that's just overriding effect. I think here I just focus on key effects in financial services. Of course, security is a big issue, but not just financial services in particular.
And then we'll open it up for questions. So essentially, a people-moderated panel.
So Dorian and I have just been chatting amongst ourselves and doing I'll show you mine if you show me yours. And I think one thing that is probably a good theme for this discussion is the fact that getting the most out of your data can mean a lot of different things. I mean, we are all collecting and using data constantly in every aspect of our lives, and between us we've got two startup companies about the same age. We're both a year old. We both have 12 people. Dorian's company Squiro is based in Switzerland, but moving into the UK. My company Essentia Analytics is based in Notting Hill, so starting up West London Tech City, yeah. And we are, what we're doing in some ways is very complementary, but it's also very different. I'll let Dorian explain what he does, and hopefully it will be relevant to lots of you. What I do, what Essentia does, is software that helps fund managers and traders make better investment decisions. So this is about using data about yourself and your own behavior, and that starts with transactional data, so data on the trades that you've done. And then fleshes that out with data about the context in which you made those investment decisions. So the market context, the physical context. So we can take data from your Upband or your Fitbit or any other device that's collecting data about you as a physical person. And then also the psychological context in which you're making decisions. And these are all kinds of data that haven't necessarily been actively captured by fund managers in the past, or if they have been, the fund manager hasn't known it. And my view of that is, well, why shouldn't you be able to harness the power of your own data to help you make better decisions in your own job? In the world of fund management and trading, there's a lot of money riding on these decisions, and if you can make one decision slightly better, there's a lot of benefit to that. So although it, to people who are not in the capital market space, it sounds like it's a super niche thing. There are thousands and thousands of professional investors all around the world who all have the same problem, which is a limited number of hours in the day, a limited amount of energy, intellectual energy and physical energy and emotional energy, and a need to maximize their return on energy expended, because that means maximizing return on capital. So that's what we do. We use data analytics to help them maximize those returns. But Dorian does something much broader, and I'll let him explain it.
Thank you, Claire, for the introduction. What we do, we are a Swiss, Zurich-based company. We actually moved now to the UK. I'll come to that in a moment. What we do, if you look at any company, and any company has, say, 100% of all data available, that's that space here. Normally about 20% is structured data. Data that is numbers that you can summarize, multiply, essentially compute. That piece of data today can be accessed widely with, as an example, Excel, or business intelligence solutions like ClickView, Tableau, and others. In that specific trade area that you do, with tools like Claire's, where you make more sense out of that structured piece of data. That's about that size, 20%. The other size, the other part, the 80%, is unstructured data. I see a lot of you making notes. For us humans, this is very structured. I hope at least that your notes are structured. But for a computer, it's unstructured. I have not seen yet Excel being able to compute a value out of 3 rows of text. So unstructured, like call notes, research, mail, chat, what have you. In most companies today, you can access that type of data through enterprise search, which more often than not does not work. So what we bring to the table, the niche we saw, is connect those two worlds. That is, take structured pieces of data, connect them to unstructured pieces of data. Gartner calls this context intelligence. Now that might sound a bit theoretical. Let me give you an example. We have been invited here to London to the FinTech Innovation Lab run by 12 Banks and Accenture. And also privileged to be here in level 39. And one of the cases we are just completed for one of the participating banks is a typical research analyst desk. Say you're a research analyst and you need to get an analysis on, say, the mobile payment provider space. There's a lot of action in that space, I can tell you. What you do today, you would probably turn to sources like TechCrunch, like other publicly available news sources, and get a bit of a piece here, get of a piece there about companies in that space. If you then want to know how much investment went into that category and how does that pan out over time, it's normally a very time-consuming process. Researchers waste countless hours in banks doing this. What we do by combining structured with unstructured data, we're literally able to reduce that to a drag and drop operation to get you a full picture of analysis on who is active in that space, where do they come from, what has been the volume of investment in this software category, say between the North American space and European space. So what we do there is we combine structured with unstructured information to provide you new insights and allow you to have a better decision making. That's what we do. One of the use cases, there are many more that you can apply this technology to, from sales intelligence to operational intelligence, that is escalation issue detection, or governance, risk and compliance, that is, as an example, issue detection in, say, chat of some bankers misbehaving and so on. All of that kind of applications are up there doing the same thing, connecting pieces for new insights, making use of data. That's where we are very much aligned with what you do, Claire, and what we do.
So, what would you like to know about our two companies and how we're addressing data? Anything specific?
Claire, exactly what data do you take?
So we start with trade data, which comes out of the back-end system of your average fund manager in flat file format daily. We also take holdings data. So we start with that. And then, there are some people who don't want to do any additional work, and therefore that's them done. But they have a tendency not to ever look backward at their behavior. They only, because there's so much information coming at them all the time, it's very hard to take the time to look backward in the rearview mirror and say, oh God, I have a tendency to I do most of my trading on Tuesdays, or I tend to exit my winners too soon and run my losers too long, or I trade around in the summer months and I always lose money. And I say all of these, I'm an ex-fund manager myself, and I know this to be true, that we all have these very human habits that we cannot stop ourselves from feeling the urge to do. But if we can see the data that says, this is you in the mirror, that's what you look like naked, Just you looking at it, nobody else needs to see that, but it's a bit of an awakening. And what you can do with that is just see, I should not be even bothering with this kind of investment or this type of activity. I should be focusing on this because it's where I actually add value. And then if I want to hone it even further, essentially collects more data. So it can, by permission of the user, collect biometric data and psychological data and even just note-taking data. So we offer what I call like an Evernote for fund managers, which is a place to jot your notes down that's designed very much for professional investors so that they can see exactly what they're looking at, why they've been doing what they've been doing, go back to it very quickly, and every time they click on anything, data's being collected that can then be brought back into the mix for analysis.
I guess that there's a debate in psychology about whether if you tell someone about their biases, they can do anything about those biases. So do you have any longitudinal data on whether fund manager performance improves after they've implemented this?
It's too early for us to say, but I think what we're doing is not trying to tell them to stop having their biases, but rather call their attention to the fact that they exist and give them the ability to set up alerts and mechanisms to say, you're doing it again. You can still do it. Nobody's going to stop you. This is not a compliance system, but it's about sort of recognizing your habits. And what I'm banking on is that a bit of self-awareness might actually cause people to make fewer mistakes and more money. And we're very much geared towards being able to prove it. So, we've been live on desktops since October, so, it's only been a few months, and it'll probably be another year or so before we can say anything, that compelling.
You first.
How much of these context and analysis is being done by humans today, or is it all artificial? How automated is this analytics currently? It's a question for both, actually.
Well, so for what we do at Essentia, it is very automated, but the part that's less automated that will become more so is the getting the data into our system in the format that it needs to be in. So we can take it in a flat file format, but every institution, every fund management firm has data in a different format, coming from different systems. There's no chance that it will ever be standardized in my lifetime, I think. And so we have to deal with that. And today, that's fairly human intensive. But we are focused on trying to find ways to make that less the case. But the analytics themselves, that's, we write algorithms and they are automating the process of actually, crunching the numbers and then spewing out visualizations that are intuitive to the user so they can look at it and say, oh yeah, okay, I know what that means.
But do you sorry to interrupt, but do you translate, or do you literally just throw the raw data back at them, whatever the analytic trends come out and you interpret?
Well, what we're doing is taking the data and honing in on effectively the answer to a question. So if a fund manager gets judged on whether he or she is skilled or not based on whether they make money, right? But that's not actually a measure of skill. That is just a measure of the outcome. There's a lot of luck involved with it, and you don't get paid to get lucky. You get paid to be skilled. And yet, if you can't tell which part was luck and which part was skilled, how can you possibly maximize the skill part? So what we do is take the skill part and say, okay, fund management skill, it involves stock picking, it involves timing of entry, it involves scaling in, it involves trading around when you're in there, scaling out, timing of exit. There are lots of different sort of sub-skills involved. And so we're taking data that we're then crunching to show you, here's how you do in this particular area. So it's translation in that regard, I guess.
In our case, it's think of Square like a shoebox that you can throw different types of unstructured data in. And yes, indeed, we try to connect those pieces together as good as we can. Now, as Claire just outlined, different formats, different standards. I see my name spelled in about half a dozen different versions. Try to piece that together. There is always only a degree of confidence that you can do that. But I think that's where computers are good at. They can crunch huge amounts of these type of routines and questions and come up with a level of confidence that tells you, well, actually, these two elements probably belong together. I do not think that, at least that's my hope, for a number of reasons, that a computer yet can make out of that already the predictive deduction that you would need to make the absolute decision-making automation, super-duper artificial intelligence case. Would be a bit scary, wouldn't it? But what you already can do with that volumes of data that's growing is make data visible in an easier format. That already helps a lot to make better decisions in themselves. So that first step is already a huge thing to do. It's one of those lovely human-generated problems, if you may say so, because it's us generating data. It's nobody ever. I have not seen a rabbit generating data. It's us humans generating data. And make that visible and usable, I think that's one of the bigger challenges ahead of us. I think there was over there a question, if you're sort of in sequence, and they were there and then here.
I'm really intrigued by your concept, and I'm struck by the use of the word self-awareness, and it feels like it's almost a way of kind of outsourcing or externalizing the concept of self-awareness with potentially really wide applications outside of the company market you're looking at. But I wondered to what extent you think people are actually wanting to see that about themselves and see how their habits and behaviours actually drive outcomes, and how's that been received by the people that are actually using it, by the fund managers? How do they like seeing something pop up and how I'm doing it again?
It's a very sort of human thing to be afraid of looking at yourself in the mirror. It is important, therefore, that we make people feel safe and that they understand that nobody else is looking at this, just they are. You know, their trade data is the property of the firm, and the firm can run analytics on the trade data. But it's, you know, to the extent that they're bringing in data about what they've been thinking, or how much sleep they got last night, or whether they're hungover, or, I mean, we have clients who are capturing all of this data because they want to know, do they perform better or worse in certain circumstances? And they're happy to to capture that information because they know nobody else is going to see it. And it's worth it to them to look in the mirror because there's a lot of money involved, you know. And if you can, if our software can help you make 20 basis points better performance every year, depending on how much money you're running and what your fees are, but either way, it's worth a lot. And your job as a fund manager is to perform. So if you're not willing to do that, and everybody else around you is willing to do it, it becomes a disadvantage at best, and potentially, you know, a signal that you're not prepared to actually do your job at worst. And that's not how we're framing it today. So few people do this that it's a massive opportunity. Just like athletes. I mean, this is like footballers who, you know, one day decided to start capturing lots of data about every little thing they do and analyze it and watch game tapes and have coaches and do things in a much more structured feedback loop sort of way. And lo and behold, they've got much better. And these days, you can't be playing professional sport without those things. It's just not even competitive. In fund management, there's been a very relaxed attitude towards all of that for a very long time, and I think that post the financial crisis, and given the way that technology is changing the industry in terms of algorithms and systematic strategies, fund managers are waking up to the fact that, God, they better be gold medalists, because, you know, before long somebody else is going to be, or some computer is going to be eating their lunch.
Question very related.
Yeah, what you can do, at least by starting with historical data, is